Hello everyone, this is the pre-market report video for 27th January 2023 in terms of Nifty and Bank Nifty. Last Wednesday, Indian market had one of the worst monthly expiry day. Nifty opened below 18,100, then slides continuously. However, it found support at near 17,900 and closed just below it. Market was mainly dragged by all major banks. As you all might know now, even Bank Nifty dropped over 1000 points. FII net sold shares worth approximately 2,400 crore rupees and DAI net bought shares worth approximately 1,400 crore rupees. Anyway, it's done and dusted information. Now, regarding US market, last night S&P 500 opens 0.5% gap up, and because of the overwhelming positive news, it pushed to close over 1%. Before the US market opening, US Bureau of Economic Analysis released their first preliminary GDP data for the December quarter. The data showed that US economy grown at 2.9% against expectation of 2.6%. Just remember this, guys. Always keep an eye out for this CME Fed monitoring tool. I'll provide the link in the description below. Just note it down for the future reference. Basically, this is interest rate fear gauge. This will adjust immediately for any news, and this is the #1 go-to tool for investors for regarding interest rate hike fear. This tool at present shows for 98% probability that Fed will increase only 0.25% in the upcoming FOMC meeting, and more than 60% indicating that the interest rate peak will be between 4.75 to 5%, which means under 5%. It's kind of indicating that there is no interest rate hike fear at present in the US market, but recession and slowdown fear is still there. So only this positive GDP data boosted the market sentiment. Then the second one, PCE price data. The regular viewers of this channel might remember this. Lot of times we discussed about this, that for interest rate decision, Fed don't use the regular conventional consumer inflation data. Rather than they always use the PCE inflation data. That PCE inflation for the December month is due to release tonight, and at the time of last FOMC meeting, it was the major worry for the Fed people since it was always around 6 to 7% band for over 10 months. Then after the FOMC meeting for November month, for the first time it dropped to 5.5% and the data was released at the end of December. Now last night PCE prices was released, which is an input for the calculation of PCE inflation. That dropped to 3.2% from 4.3% a month ago, which is the huge positive since kind of indicating tonight this PCE inflation might come around 5%. Again, this also increased the overall market sentiment. Then regarding tech stocks, Tesla released their earnings and they did beat the analyst estimation. Their revenue for the December quarter comes as over $24 billion and the earnings per share was $1.19 against expectation of $1.13. And because of this good results, Tesla shares increased over 11% in one single day, which subsequently impacted positively on other tech stocks as well. So in the end, Dow Jones increased by 0.61%, S&P 500 up by 1.1%, Nasdaq rallied over 1.76%, and US VIX moved below 19, whereas dollar index and 10-year treasury bond yield nearly same as Wednesday morning, 101.6 and 3.5% respectively. Then regarding oil, US stockpile, the reserve storage comes as less than expected. This made the oil price to rally over 1 to 1.5%. At the time of this video, WTI crude oil was trading at $81 per barrel and Brent crude oil was trading at $87.5 per barrel. Coming to Indian areas, both banks and IT stocks increased by 1 to 2%. Even SGX Nifty at 3 AM Indian Standard Time, it closed at 18,027, kind of indicating at least 70 to 80 points gap up opening. So that's what happened in the global market. Now coming to Indian market. Last Wednesday in the aftermarket hours, Tata Motors released their quarterly earnings. Finally, after 7 consecutive quarters of loss, their net profit turns positive. The net profit comes as approximately around 3,000 crore rupees, whereas analysts expected the profit of only around 300 to 400 crore rupees. Even the revenue increased by 22% to 88,000 crore rupees. I don't know how the market will react to this, But I consider this is very huge, much needed positive for Tata Motors. Even Bajaj Auto too beat the analyst estimation. I mean, analysts expected the profit to be around 1,379 crore rupees, whereas it comes as near 1,491 crore rupees. In terms of revenue, it's approximately 9,300 crore rupees against 9,000 crore rupees. So clearly, it looks like auto stocks are really doing better. Then the another major company that released their earnings was Dr. Reddy's. And their net profit increased over 75% and their net sales increased by near 30%. Their main revenue jump contribution comes from North America where it increased over 64%. So clearly most of the companies who were releasing the earnings were beating the street estimation. However, as I said in my previous budget video, I expect the market to be nervous at least till the time of budget. Anyway, as a summary, global momentum is positive. Indian ADRs were indicating 1 to 2% positive. Even SGX Nifty indicating gap up opening of 70 to 80 points. So it's all good except the one and only present worry, which is none other than Indian Union budget. Let's see. Coming to technical, last Wednesday on the daily chart, both Nifty and Bank Nifty forms a long bearish candle with a lower high and lower low formation with a above average trade volume. It's kind of indicating the nervousness in the market. On Wednesday, Nifty opened below 18,100 and before settling near 17,900, it reached the day's low of 17,846. So hereafter, any decisive move that breaks 17,800 can easily push the Nifty towards 17,600 levels. 17,800 is very crucial psychological level since it's still within that December-January band 17,800 to 18,200. On the flip side, if it moves above 18,000, again there is a high possibility that it will reach the 18,100 and above. In case of Bank Nifty, on Monday and Tuesday, it breaks and moves above from the January 10th mother candle. Then on Wednesday, it forms a bigger bearish candle and breaks the downside support. So now this candle will become kind of guidance candle if Bank Nifty moves above from here. But moving below 41,500 can put more pressure and will push it down further below the 41,000 mark in the short term. Regarding moving average summary, on Tuesday closing, Nifty was trading only below 50-day simple moving average. But in one single day, everything was upside down changed. I mean, by Wednesday closing, at present, Nifty is trading below 5, 10, 20 and 50-day both simple and exponential moving average. Even it moves below 100-day simple moving average. So from strong buy summary, it now turns to sell. In technical indicator side too, it's double demotion. From buy, it turns to strong sell. RSI value was dropped near 42.5. Then in case of Bank Nifty too, the story is the same. Based on Wednesday closing, Bank Nifty moves below 5, 10, 20 and 50-day both simple and exponential moving average. So as a summary, from strong buy, it turns to sell signal. Then about technical indicator, it's strong sell, whereas RSI value dropped below 40 levels. As you may know, yesterday was the options monthly expiry. So instead of options open interest, let's have a look at the pivot chart for both Nifty and Bank Nifty. So from pivot chart for Nifty, at present the immediate support is at 17,790. On the higher side, the immediate resistance to break is at 18,040. Then in terms of Bank Nifty, the immediate support is present at around 41,240, whereas the immediate resistance is at 42,430. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the videos. It will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I am doing it for my and viewers' educational purpose only. Thanks for watching.